motherfucker.
What's up, guys? It's May 4th, 2026. Okay, so I think Trump is trying to bait the Iranian Republican, whatever, guard to freaking fire at civilian ships or something. So I thought they were going to do a false flag over the weekend. And I was like, okay, it's not happening Saturday. I give it 48 hours into Monday. False flag, come on, let's get a false flag. But nope, I guess we're going to play this game where they're going to try and get some ships through. And hopefully the Iranians take the bait and blow up one of those ships, or one of those ships accidentally hits a mine or something and they'll blame them. And I don't know what the heck is going on, because they are not sending the Navy in there. They just want the dumb civilian tankers to go through, and hopefully one of them gets sunk, and then we get our reason to have another war, another 60-day war. Okay, so this is very annoying. I rather have a quick false flag. I get a dump in the markets. I can buy more stocks. Okay, I bought a little bit here and there, but you know what? The software could have been a bit more softer, right? You see now, today and Friday and last Friday, you see the software stocks, they're moving up, Bitcoin moving up. They want to go up. I want to believe they're going to go up, but we got to get through the false flag. Like, hurry up, give me the false flag, and then I can really put all my money fully into software and Bitcoin, AI infrastructure stocks, and ride those out. All right. You can see, like, today, the semiconductors barely are getting anywhere. Like, overnight, Korea went up, Taiwan went up, and then this morning, the memory stocks, SanDisk, Micron, they're following the Koreans and the Taiwanese. Most of them are just semiconductors, but still, overall, nobody wants to buy other semiconductor stocks out of that. So today we see a little bit pullback, very minor, very soft, okay? But the more important thing is, you see where the money's flowing right now? IGV was up like 3% in the morning. They want to go there. We want to break out. We're ready to break out. Okay? All I got right now is the Oracle, the Adobe, and then the core weave right here, the core weave, and then if you got the leverage, you can do the CRWG for core weave. Oracle, we can do leverage too with ORCU, ORCX. It's not too late to get in. Like, if you didn't buy some of it last week, or if Adobe you bought on like 2 Thursdays ago, it's still fine. They're still relatively early to get in, because we're just about to launch. Same thing with Bitcoin, right? Let's look at Bitcoin. Look at it right now. Perfect. Perfect. This is exactly what I want to see. Every little pullback is met with a more aggressive push up. Ready to go, ready to rock right here. Once we get past this purple line at 80,700 ish, we're going to move to 90. Okay, so 89,000. And then we're going to move up to 98. Okay, 95, 98, and 100. That's the end game. That is the end game. But the question now, though, is there going to be a false flag? Because if there's going to be a false flag, I'm not going to put all my money in right now. Like, I have a little bit in here from the past 2 weeks, but if there's going to be a better dip where I can buy more at a cheaper price, I'd rather wait for that. Honestly, I'd rather wait for that. And also, like, some of these names will have earnings. Palantir will have earnings. So that's a big component of IGV. So that might affect the other stocks. This will have earnings after the close, Palantir. Okay. Once that's done, I can buy Palantir safely. Okay. Once I see whether it goes up or down, I don't care. I just want to see it finish its job. Like if it's going down, then I want to see it hold like 130. Okay. If it goes up, then fine. I'll chase it. I don't care. But I better not be chasing it. And then the next day we have a false flag. And then all of a sudden the markets get spooked and the NASDAQ crashes and then everything crashes. Very annoying to time this right now. Okay. I'd rather have if big events happen over the weekend, I get the dip, but it looks like that didn't happen. And now we have to suffer through earnings again because also IREN, another one, right? If you got some at 42 on IREN, and then there's also, leverage ETFs too, IREG, IREX, IRE. So yeah, Eric was talking about those. So yeah, if you guys really want to take the risk, you can. Like one of the things you could do is like you buy the normal stock, IREN, and then once you think it's safe, or if there's a big dip, then you buy the leverage to add to it. You know what I mean? Like here, you just buy the stock itself. So if it does go down, you don't get punished too badly. You have enough left over, you can move into the leverage when it takes another dip. You know what I mean? So only when you're sure the trend is starting, because it looks like it is about to start. This daily chart here looks like it's about to start, right? HUT, it's about to start, right? It's about to start. Core Z, yeah, the same thing with Core Z. This won't have earnings until like sometime later. I think HUT too, right? Okay, this one will be Wednesday. Okay, this one's Wednesday. So yeah, we got to get through Wednesday for HUT in the morning, IREN I think afternoon, Thursday. Yeah. So there's still a couple earnings I got to wait for. We still got to wait for Iran to take the bait. So that's the problem right now. It's like I'd rather have the dump over the weekend so I could buy those things cheaper before their earnings, because now you have to wait for earnings and a potential strike. So there you go. Yeah. So right now, with the SPY, I think we're done. We're done with them. Those two can't move up anymore because we're starting a rotation phase. So all the money from semiconductors is going to get out, and I hope, like I told you last week, I hope that means they're going to move into small caps and software. Okay? I want to see that. That's what I want to see. So the semiconductors can go down, but the market will not go down. It will go sideways because people are moving money out of one place and just shuffling it into another place. That's all they're doing. And hopefully that's when you're going to see a big move in software. All the software names go up another 50 to 100%, while semiconductors goes down like 20%, something like that over the next month. That's what I expect. So a 20% down on semiconductors means a 50 to 100% on software, crypto, all the other junk, small cap, biotech. And from then on, the S&P will just like float sideways into June, July, right? That's what it is. So that's all. It's just a rotation game right now. That's it. Would you buy IGV or just use? The thing is, like, I'd rather buy each individual company. Yeah, because then I can manage it. Because if you just buy IGV, you can't control the earnings, right? Because each of them will have different days for earnings. So then I could just move in and out certain stocks at leisure. If you buy the IGV, you're going to have to hold it through all the earnings, basically, right? Which sucks. The earnings might not be equivalent, right? Some will be good, some will be bad, and IGV will just like kind of like limp up a bit, but you get more benefit from targeting. Like Oracle won't report earnings until June. I can go all in on Oracle. I have a whole month to wait for Oracle to move up. I get out with that. I don't need to worry about, oh, this other software company report earnings and it drags IGV down. Get what I mean? Right? So that's why I don't want to do that. Also, they don't have a leverage ETF for IGV. Like, WebL follows FDN. AIBU is some kind of made up ETF that partially tracks IGV, FDN, and semiconductors together because they have little bits of each one. So that's why WebL and AIBU also will suffer just like IGV, I guess, in a way, because they're going to have to kind of like one stock will go up, another will go down, and it's just like you're not getting any benefits. So see, that's the pain of diversification, right? I hate diversification. I know, like, most people, they're taught to diversify, diversify, diversify. That's okay when you don't know anything any better. But if you know better and you know how the market works, you should be focused on putting as much money on the winners and avoid as many losers as possible and keep shuffling around. That's how the market's going to be run. Like you see here, you diversify. If I diversify and put in SPY, I don't get much benefit. If I put it all in semiconductors from last April, I get way more benefit than just using S&P, right? That's true. Like semiconductors have been the best performing sector for a year now, right? Outside of oil and gas in the last part of this run, and gold and silver during like the middle part of this run. So you got to keep rolling around, blah blah blah, and rolling around. That's how you do it. So that's why I told you guys, right? Um, get into oil, right? And then after the oil was done, then you move out and go into software, whatever. We got a little run from there. Now semiconductors took over the last half of April. Now that money is going to get out. So then I'm waiting it for it to go back into software again and then make my money again. And that's it. That's all you can do right now. Because the real big dip will come probably into the midterms, September, October. All right. That's all people are waiting for now. This huge ass run here, it's done. It's complete for the S. We might be able to dip and then try to make a move towards 7,500. That's the peak target that I'm expecting, but I'm not guaranteeing that it will go back up there into July, but it could, you know. But it doesn't matter. We're not playing the index. We're playing the individual stocks that will move, and especially Bitcoin too. Bitcoin definitely follows the uh, software. So yeah, this chart is beautiful right here for MSTR. Like I'm not really recommending MSTR too much compared to the others, probably still, because MSTR has a lot of overhead. A lot of morons bought MSTR as it was going down here. So for it to go back up requires you to have to fight all the people that are trying to get out at break even. The people that are over here are waiting for it to hit that price to get out. The people that bought over here are waiting. So every time it hits these regions, it gets stuck. But when you look at something like HUT, IREN, Core Z, those three stocks, once it breaks resistance, there's nothing above it because these are new highs for those. It'll be like Intel. It'll be like new. Well, Intel's never been this high since 2000, and it'll just keep flying up for no reason, just because people think it's just too high. It's just too high. It doesn't matter if it's too high. It can keep on going as high as possible until like the next shoe to drop in the Iran war, right? And we got 60 more days till the next like stupid false flag. I just want the false flag to be over with. Get in there, get my money in a month, get out, and then do this again, do this dance again. We just gotta keep dancing until October. That's essentially the game, which sucks. But this is how Trump set this up. This is the same way it was like in 2018 and 2019 when Trump was messing around, yelling at the Fed, talking about tariffs and stuff. Like he did this already. We've done this before. You either have to dance with Trump or just ignore this noise and suffer the consequences, because most people will just stay with the S&P 500. They'll get mad at Trump when the S&P goes down. They'll get happy when it goes back up, and then it'll just be a repeating story. It's like, oh, it's the stock's going down. My 401k is going down. Yeah, see, the people that are not moving in and out, they're just going to yell and scream, and that's all they're doing. But they're not being proactive and realizing that Trump has a pattern. He has a pattern, right? We know about tacoing. We know about like making threats, uh, doing extreme like art of the deal type stuff, like the tariffs, right? He just put a whole bunch of tariffs that were never going to pass, right? The Supreme Court already reversed everything he did. So it was like everything he did there was going to be reversed at some point. So it's the same thing with this. We just got to keep playing this game. So every time there's a big dip, you get in. Every time there's a bump, you get out. Repeat, repeat, repeat. Nothing we can do about it. So there you go. That's what I'm doing. Okay. I'll be done with that. And then we'll get back into oil and all that, probably like June, right? July into August. We'll see. But there could be a major dip in oil as we get closer and closer to midterms as well. So not too, not you don't need to be too much of a hurry to get in there. Oh, let me check lithium again. Is lithium going up anymore? No. So lithium made a minor new high here. It's higher than what it was at the end of January. So I'm still watching this one. I believe uranium is still weak. So yeah, not going to be in a rush for that. So let's see where lithium ends up. I don't think it can go very far. It's going to have to pull back again. So stick with the software stuff. Let's see, steel. Steel, how's steel doing? No, still doing good. Okay, no problem. So the stuff scrolling on top, well, we were talking about steel, we were talking about some aluminum, right? KALU. Okay, this one pulling back a little bit. Okay, yeah. I think it's just gonna hold here. So yeah, watch those two. Marijuana. Let me see, not this one. MSOS. All right, yeah, no rush here. Okay, yeah, no rush. No rush. All right. So wait for this to maybe drift back towards 450. Let's see what happens then. And what about the mushrooms and LSD? Which one was the best one? I don't know if this one was better than the other one. I forgot. This one, yeah, okay. I think this was the winner. CMPS. So that one's Peter Thiel. And then ATAI was the one that company buys some shares of this one. Okay. So CMPS is still the winner here. They'll probably have earnings at some point. I don't know. Looks like this is not confirmed to be on Thursday. So let's see. The last one was in March. Okay. When was the last one here? July. This will take a while for earnings. I don't know. I don't think there's a rush to get in this thing. Yeah, just keep your focus on the Bitcoin and software stuff. I don't really care about these right now. But yeah, just keep them in your watch list. The stuff scrolling around. Yeah, that definitely will play a factor as we get into midterms. Okay. And biotechs too. Biotechs should move up. So a lot of these companies that do the mushrooms and LSD, yeah, they might be doing pretty well soon too. Mm, okay. Very good. All right, that's it. I don't think I got to talk too much today. I'm still waiting for the false flag. Maybe there isn't going to be no false flag, but usually there should be a false flag. I know how these guys play. They want to bait the Iranians to do something. They're already shooting at the UAE, and there's rumors flying around that the UAE is going to declare war or something. Oh my god, whatever. This might take all week, dude. That sucks. That really sucks. That means I can't tell you guys to confidently that you should buy. Like Oracle's ready to go. I'm just not sure that there won't be a false flag. Like I would love just to buy a ton more Oracle, but at this point you got to wait until it successfully gets through 190, you know? So if you bought it at 164, you got to wait a while to see if you can add it at 190 up here, or you wait for the false flag and you can buy more at 150 or something. But shoot, crazy. Yeah, that sucks. That really sucks. I wish I had insider knowledge, guys. That really would help with the timing here, but I don't. So that's it. Anyhow, Iron will have earnings. I'll watch this, and this will be Thursday after the close. Remember that. And Hut will be Wednesday before the open. So those two will be reporting earnings closely together. So that'll be where we're going to be watching that. All right, that's it, guys. Done. Very easy. I think you guys know what to do. Should be easy to make money for the next month. Okay, let's look at this thing here. Taiwan Semiconductors and Intel. So now we're going to compare some different way of fundamentals, right? So one way was forward price to earnings. The other way was price to earnings growth. And here's another way. You can look at it in terms of sales multiples. And this is usually how they would value software companies. Okay, they would look at sales. Um, and I don't know if this is the appropriate way to look at chip companies, but I found this pretty interesting. So when you compare it with sales, all that's been happening with Intel stock right now is they're trying to catch up with TSMC. As you know, Intel is trying to do foundry service. So they are going to manufacture chips for other companies like Tesla, like Apple, like Nvidia, AMD, whatever. Because the government has told everyone that, yo, you guys should diversify and stop using Taiwan, Korea to make your chips because, what if there's a war and we can't protect the supply chain, right? So that helps because now Intel will get customers, even if Intel doesn't have a good product compared to TSMC. People have to go to Intel. So Intel is essentially taking away customers for TSMC, right? Because TSMC makes about like 70-80%, I guess, of digital logic circuits. All right, we're ignoring memory. Okay, memory is the domain of Japan, China, and Korea. Talk about logic chips. So CPUs, GPUs, okay, digital controllers, stuff like that. And so if we're just trying to say that Intel will catch up to TSMC, will take away their customers, then it makes sense when you look at sales. So at the top portion, you have price over sales. Bottom is like, what is that? Earnings What is that, man? It's been a long time since I read that book about fundamental evaluations. I read that book way back in the 90s. And then after I saw the dot-com bubble, that's when I just threw that away. I was like, man, stock market doesn't care about fundamentals. If I actually cared about fundamentals, I wouldn't have participated in the big bubble of the 90s, 90s was crazy. That's why I said, if we get a real bubble, this is not even a bubble yet. In the 90s, you had dot-com companies that made nothing. They had no product. All they had was a website, and they were being evaluated at 8,000 times price to earnings. Nobody gave a crap about value fundamentals, okay? So I threw that book away. But it's a popular book. I think it's made by one of those from Cornell. I think it was a professor from Cornell who wrote that book. Everybody would read that book to learn about how to evaluate companies with fundamentals. I forgot his name, but he always shows up on CNBC from time to time. Uh, let me see. Let me see. Earnings. So EV per sales. Yeah, enterprise value. Okay, enterprise value. All right. There you go. And what is enterprise value? Oh boy. Okay, so it's market cap plus debt minus cash. Whatever. You can tell I don't care. Like I gave up on using fundamentals to evaluate stocks a long time ago. So let me see. Let me try to find that book. What was it called? So investing valuations book. Okay, there we go. It's famous. Of course, this guy's famous. Yeah, investment valuation written by Aswath Damodaran. All right. Okay, so I'll put it up for you here. Right here. Okay, you can look that up. If you really care about evaluating things through fundamentals, there you go. Okay, there's the book. Screenshot that. Investment valuation. So I don't care about this stuff. I just look at charts. I just look at psychology. If people want to overpay for a stock, who am I to argue? Intel can go up to 300 in a month. I don't care. I'll chase it. Bitcoin can go to 1 million. Does it have actual valuation? Who knows? It's whatever. It's supply and demand. Whoever wants to pay the price for something, that's all that matters. I get paid by price, not paid by what I think. It's what the market thinks, right? If the market is wrong, so be it. As long as I make money in the meantime. Yeah. Maybe in 10 years Bitcoin will go to zero, sure. But right now it's not zero. It's going to go up to 100,000. So I might as well make some money on it. That's how I think. about trading and so to me, like, investing is just trading in a longer time frame. So maybe in 30 years Bitcoin is zero after quantum computing comes around and they crack all the keys and all that, whatever. Maybe, but for now, between Bitcoin going from 60,000 to zero, it could go up to a million and then go to zero, right? So I might as well make some money if Bitcoin goes to a million in the meantime. I don't know. I'm just saying that's like an example. So it depends on your time horizon, right? That's all it is. It just depends on your time horizon. That's how you should look at it. Okay, let's see. What's the earnings? So Palantir, I talked about. Okay, Rig Transocean. That one's a pretty good natural gas, and I believe they ship natural gas over ships, right? I think that's what this company does. I forgot. I'll watch that one. On semiconductor, there's one semiconductor there. We have one optical interconnect type company down here. Not really big. Fabrinet, not big. The big ones will be Lumentum on Tuesday and Coherent on Wednesday. Those will be the big boys that will wait. And then we have CoreWeave and IREN on Thursday, right? And AAOI, another optical one on Thursday. So there will be a few important companies to watch for the AI stuff. So I would say if you really want to focus on just AI, right? It's Palantir after the close, Fabrinet, FN after the close, and then Tuesday we'll have AMD, obviously, and then Lumentum, okay, Supermicro, SMCI, because they make the motherboards for all these data centers, Arista Networks. So this is like a smaller version of Cisco. So this will be very important. Whatever Arista says will affect probably a lot of other companies because they buy the data center racks and then they sell them to other people, right? They basically are like a Cisco Systems. So they're a smaller version, more nimble version. They when I used to have a bunch of this stock, they were in campuses, smaller campuses. So kind of like maybe university level size, not so much like Facebook level, right? Uh, or or Amazon, yeah. And then we have another small semiconductor one. A Lab. This one's I don't know. It's kind of a risky stock, but I don't know how much it has anything to do with AI necessarily. So, but I guess you could watch this one. Okay, next one, Coherent, important, COHR, very important there. We have one quantum computing, one IONQ, if you're curious about that. Then we have ARM, for sure, ARM, right? And then the next one, Thursday, will be CoreWeave, IREN, AOI. Okay, those three, very good. And that'll be it. That'll be it for the week. There'll be some other ones that are going to be interesting to look at if you care about that. ET Energy Transfer. Okay, so we got an energy stock right there. Look at that one. And we have Hut, obviously. We talked about Hut already. And then let's see. Novo Nordisk. I mean, Ozempic, maybe you want to watch that. And Disney, I guess. Those are the big, large cap ones that people probably have a lot of inside their portfolio. Novo Nordisk has went down a lot, man. So I don't know if you want to bottom fish this before new Ozempic numbers come out, because I think the Ozempic hype is dead, and you should move on to the peptide hype. So that'll be more important when we get back to HIMS. I'll have to show the HIMS chart later if I remember to. Let's see, anything else? Axon, drone, and police body cams. I used to favor this stock 2 years ago. If you remember, I talked about Axon and Palantir, but Axon already hit like a little top last year, so I didn't bother with talking about this anymore. Maybe after this earnings, I'll talk about it again. I'm sure like eventually it'll continue up, but we might have to wait for October for this one. Okay, anything else? Celsius, CELH, is the energy drink company. I was waiting to see if it could continue on up. No, it hasn't. So this past year and a half, no, we still can't continue on. This used to be really good if you bought it at like $10 or $1, $10. It went up to like $80, 60 to 80. That was a very good trade for a while, but it still hasn't shown me anything. Another one is Rocket Lab, RKLB. This one was a fun stock. Okay, it went from $5 to like 50. It's like a smaller version of SpaceX. Like they're a cheaper form of SpaceX. So the people that can't afford to launch their satellites on SpaceX, they'll go to Rocket Lab. So RKLB might be something you want to keep on your watch list and pay attention to. I'm not saying you should buy it right now, but it could be something to watch when SpaceX gets its IPO and stuff. Like maybe there'll be some another hype for space companies, because most of the space companies got hyped up around the same time, like a year ago, a year and a half ago. ASTS, Rocket Lab, some other ones. So they kind of went up together. So maybe it's not a good time right now to see if this one wants to continue on. Probably wait till October. Okay. And then we have an energy stock on Friday, ENB, Enbridge. I think this is natural gas. Watch that one. And Wolf, WULF, kind of like a small, I forgot if it was a semiconductor or something else. But yeah, I remember this used to be popular too as a trade. So this is the same level as A Lab, probably in terms of like gambling. This is just for gambling, I think. Wolf and A Lab is kind of way, way, way risky type stuff. But yeah, you can watch them. Why not? Put them on your list if you care. Okay, that's it. Berkshire reported over the weekend. Okay, so we'll talk a bit about that right now. So Berkshire Hathaway. So let's see. So over the weekend, we found out that Berkshire added more to their cash pile. They sold more stock. All right. Hey, what's up, He-Man? What's up? Good morning. How do you get the earnings whispers all in one page? This is on Twitter. Go to Twitter and get it from Twitter. So on Twitter, there is earnings whisper account. Go over there, and every week they have an image they put on Friday. And then all I do is every Friday I go over there and I yoink that image. Get what I mean? So yeah, go and just take their image. So I think the account is eWhisper. Whispers or whisper. I don't know if there's an S or not at the end, but yeah, go to Twitter and you gotta have a Twitter account, or I guess maybe you don't have to have a Twitter account, but I'm pretty sure Elon made it so that you have to have a Twitter account to see it. But otherwise, you could just go on my show and wait until I talk about it, and you could just take a picture, screenshot this. Yeah, but okay. So Warren sold more stock. He's not CEO anymore. Okay, but I'm sure the new CEO of Berkshire Hathaway is going to keep his philosophy, right? And if you remember when I said, like, in the 90s, Warren Buffett got a lot of criticism, and he's getting a lot of criticism right now. Warren Buffett is underperforming the S&P 500 by 40% this year so far from last year, because he didn't buy last year's April dip. Warren Buffett doesn't believe in taco trading, I guess. Okay, so he doesn't believe in trading dips on Donald Trump. Whatever. He thinks everything is overpriced. Whatever. He's probably thinking like there's only a very few select stocks that are worth buying nowadays. Okay, fine. That's okay. No problem with that. If you want to wait for the big dip, that's okay. You're going to have to wait it out. And as the longer this bubble keeps going up, you're going to see more people on Twitter act very cocky, and they will be like, oh, Warren Buffett lost his touch, this and that. And I'm telling you, this is exactly what I saw in the 90s. People were writing articles like this. They didn't have Twitter back then, but they definitely had newspapers. And a lot of people were writing these types of stories about Warren Buffett. What's wrong with Warren? Blah blah blah, right? This is from the 1999, I think, right just before the bubble popped. Okay, so they wrote stories just like this, and 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 if you go on Twitter and you search for Warren Buffett, you'll find a lot of haters right now on there saying like he's lost his touch, he doesn't know about tech. It's true. Yeah, Warren Buffett really doesn't know about tech, really. He's not going to stick his neck out and overpay for technology at the beginning, right? It took a long time for him to even buy Apple. Believe it or not, he didn't buy Apple until much later. He really has an aversion to tech companies. Yeah. So, see the WWW pun. Yeah, 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 yeah. Yes, 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 yes. I don't think this is a negative article. Actually, it's probably like it's kind of like clickbait back in the day. They're just like they just make this clickbait like title, and then it's like when you read the article, it's not really a, a hater article, but it's a response to the haters, right? All right, let me read a little bit of it. If I don't know, do I have enough time? Yeah, okay, I got a little bit of time. After more than 30 years of unrivaled investment success, remember, this is 1999, Warren Buffett may be losing his magic touch. Shares in Buffett's Berkshire Hathaway are set to experience their first annual decline since 1990 and their worst year of performance relative to the Standard & Poor's 500 index since Buffett took control of what had been a struggling New England textile maker in 1965. So this is the same criticism you're hearing right now. If you just bought the S&P 500 for the last 20 years, you would basically be outperforming Warren Buffett right now. Yeah. Okay. Warren Buffett basically was kind of matching the S&P, and then suddenly after all the little tariff stuff the past 2 years, 3 years, he's underperforming. He's been underperforming. Okay? So, yeah. It's a tough business. Trust me. You're always compared to the S&P 500. Druckenmiller made about 30% year over year CAGR, right? Compounded annual whatever, and he he got so stressed out that he quit. He stopped doing it. He's like he made his hedge fund. He got like 20-30% for the most part every year, which is like amazing because the S&P 500 on average every year makes like about 10% on average, right? On average. But Druckenmiller was like 20-30%, and it was consistently like beating the S&P 500 really good. And he just got burnt out, and he just like, it's tough, man. Just beating it by a little bit consistently. That's why I say consistency is the worst part of the game. It's like you can have a few good trades here, but then if you get a bunch of bad trades, it'll just wipe out anything you had on the good trades. So Druckenmiller, Soros, you know what they do? The way they made so much of a gain is that they focus on a few stocks and put all their money into it. They don't diversify very much. If you believe in a few stocks and you believe those can be the big winners, you got to put your eggs in those baskets. You just cannot just think about diversification. Because if you think about diversification, then you are essentially probably just going to be performing just as well as the S&P 500. So people will just go like, why should I pay you money if you're just going to have the same performance as the S&P 500? So all these rich clients will be yelling at you. So it's a tricky game, very tricky. So, Warren Buffett is no stranger to getting criticism right now, for sure. All right. At around $54,000 a share, Berkshire's Class A stock is off 23% in 1999 against a 20% return for the S&P 500, including dividends. So 1999, probably the worst time because not only is he underperforming, he's actually losing money. So it's not just like, oh, Berkshire Hathaway is up 5% and the S&P 500 is up 40%. No, it's actually like the S&P 500 is actually up 23% and he's down by 20%. Like, dude. So this probably is the most painful time to be like an investor and you just look at that, right? Psychologically, it should break you. A lot of people, they just get their mind broke at that point and quit the game. You know, they'll just quit the game. So it takes a lot of fortitude to stick with this game. Many people come and go. Many people come and go. They get burnt out, they they leave. They'll never come back. The stress of managing trillions of dollars is just gets to you, man. So I personally, if I was like managing your guys' money, I would act very differently than how I would, right? I would take more risks and I'd probably be having good performance. But when I take other people's money, I'm have to be more careful and I take less risks. But if I take less risks, maybe that's bad for performance because I'm not putting your money into risky stocks that are ballooning 40, 50%, right? I'm not putting it all on Intel, Micron, SanDisk because I'm scared that, I'm doing something wrong eventually. So you see, it's a psychological game. And Warren Buffett has, you know, been through this game for a very long time and survived it. So some years you're not going to do well. That's just a fact. And you're just going to have to suck it up. So yeah, it's very hard to be a Druckenmiller or a Soros and just like keep having high gains all the time, right? And of course, you maybe Soros manipulates markets. I don't know. anyhow, but yeah, you can see why this is tough. All right, let's go down here to this little chart here. Let me see if I can zoom in. Okay, let's see what is in his portfolio that year. Berkshire Hathaway's equity investment portfolio is on track to experience a rare decline this year, hurt by losses in Coca-Cola and Gillette. So remember, 1999, there were a lot of tech companies, right? And this guy is in Coca-Cola and Gillette. So American Express is the big winner. So that's the only one that's winning. Okay, let's see. So 50 million shares of American Express. Let's see. It's up 54%. All right. You got 200 million shares. Coca-Cola down 12.7%. Gillette, 96 million shares, down 12.7%. Walt Disney, 51.2 million shares, down 3.3%. Freddie Mac. Okay, I've been telling you guys maybe I want to get into some Freddie Mac, Fannie Mae, so we'll see. 60.3 million shares, down negative 27.6%. The Washington Post, 1.7 million shares, negative 5%. Wells Fargo, 63.6 million shares, 1.3% positive. So he only has two stocks positive right now, Wells Fargo and American Express. I don't think this is all of his portfolio, right? I guess these are his top ones. Top ones here. I don't know. I don't know what the others are. Let's see, others. There's only 5 billion in the others category. I don't know what's in those. But yeah, so he's pretty much ignored technology. Okay, let's go to the last part of this article. Let's see. Yet Buffett hasn't been able to make the next leap forward and adapt to the current technology-driven bull market. The reason? Technology isn't in Buffett's circle of competence, and thus he doesn't feel comfortable seeking long-term winners in the sector. Buffett's avoidance of technology is ironic given his long-time friendship with Microsoft chairman Bill Gates. At the same time, Buffett's favorite sector, insurance, Geico, has been taking a beating. Late last year, Berkshire doubled its bet on insurance, paying $22 billion in Berkshire stock for General Reinsurance. What the heck is RE? Reinsurance? I don't know. The prominent reinsurer. Oh, okay. I was right. So okay. So I never heard of this company before. So I guess it's gone now after it got bought out or something. I'm sure Berkshire probably bought them out. A deal that so far has proven a bust. Steering clear of the market's high flyers, Buffett has made other investments for Berkshire in the past 2 years, including the purchases of a furniture retailer retailer and international Dairy Queen. Oh, yeah, he loves Dairy Queen. And the pending acquisition of an Iowa based electric utility, Mid American Energy. Yeah, he loves utilities too. He loves utilities. So anything you got in a Monopoly game, he probably bought it. He probably bought it for real. These may turn out to be solid long term deals for Berkshire shareholders, but none of them is setting hearts racing on Wall Street at a time when internet stocks and other tech stars are doubling every few months. The secretive Warren declined to speak with Barron's, but the rumblings from his headquarters in Omaha are that Buffett, a fiercely competitive man beneath his self deprecating, all shucks. Okay, I guess they didn't scan in the next page, but you get the idea. Okay, guys, this was a type of criticism he got back then. Okay, all right. Let's see what is more important to talk about um, before I go. Okay, let's go back here. Bitcoin. Okay, if you see here the accumulation schematic here, we got Wyckoff. Okay, and I think we're ready to go to phase E. Right here. Very good. It looks exactly like it right now. Very good. Very good. We're ready to move. And the next range will be between 87,700 and 95,000. Okay. Between these two levels, around there. I think I said like maybe 87 to 98. Probably go around up there before. We're probably going to make a new range somewhere around here. So once we go up to the next level, we'll just start zigzagging again. Yeah. So that's where we'll be at for Bitcoin. So get ready. Whether or not there'll be like a some type of false flag in the coming days, we'll see. We'll see. But if you got to get in now, if you can't wait, then yeah, sure, go ahead. But reminder, HUT will report earnings. IREN will report earnings Wednesday before the close for HUT and Thursday after the close for IREN, IREN. Okay, Core Z will probably be next week or 2 weeks. I don't know, something like that. Another thing to look at for Bitcoin is Tom McClellan mentioned this on his Twitter. He said the difference now versus late 2025 is that the non-commercial traders of Bitcoin futures are net long in a big way now. For most futures, it is commercials who are the smart money, but few qualify for that category in these futures. So the non-commercials fill that role. So what he's saying is that the smart money, the large money, this is the same way I analyzed oil too. Okay, for you guys. All right. I personally can't do this stuff. Okay. Yeah, I can't. I can't basically do this. Let me get back over there. Okay, I can't do this myself because then I have to learn how to read the commitment of traders report. So every week on a Thursday, or every other week, maybe on a Thursday, there's a commitment of traders report for commodities and futures. So Bitcoin and Ethereum are traded on the futures, just like gold, silver, wheat, oil, okay, natural gas. So for people who love to trade those futures, they look at the commitment of traders report. And so if you look at the big money people, you could figure out like, oh, when are they buying or when are they shorting in general? Okay. It doesn't necessarily mean anything, but it's something you can pay attention to. Okay. So right now, along this dip, we've had a lot of them stop shorting Bitcoin. So this next move that we're gonna about to have, all right, after completing this Wyckoff thing, you have to see that we've been zigzagging, going sideways for about 3 months. Pretty good, pretty good. That's very sizable. The last time we had a sideways move was about 2 months before we went down. So we've been zigzagging for 3 months essentially, and that's a bit longer than this. So hopefully that gives us a lot of energy to go up, and perhaps we can even skip this 87 to 98,000 type of resistance here. We can just blow right through it and go right to 100 as quickly as possible in June. If that's the case, man, HUT, IREN, and all that. And then when all the software AI stocks like get moving to again back up into July. Oh man, I hope we can have it between May and June. I hope all of June, most of June will be an upward swing, okay, before we go to 4th of July. And then when it's 4th of July, then we can go down. All right. Usually the markets stop at mid July. That's it. And then it'll start rolling over again. So a lot of times that does happen. July, I've noticed it. July is usually the time when people go on summer vacation. They stop paying attention to stocks. They made their money and they leave. Okay. Now, here, this is another cycles chart. All right. So this is a guy I followed a long time ago on Twitter, and he actually uses the moon, Jupiter, Venus to create these cycles. Okay. Okay. So he has his own way of making these cycles, and he's using an old school software. All right. This is the same software that what's his name? Oh man, I forgot his name already. Larry Williams. Larry Williams, who lives in the I think Virgin Islands or St. Bart's, one of those. He's just chilling out there. He retired over there. Okay, he's the father of the actress Michelle Williams, I think, and so he's a very famous trader. He uses the same software, all right? But he probably does something different to come up with his cycles. But anyhow, since this guy I follow, pretty good, pretty interesting guy, let's see what he says where things are going to be. So it looks like we are going to go up for a bit, right? And then move down into September. All right. This is where it looks like it's going. So we're going to move up some more, okay, in a month or two. And then we're going to go down into September. Now, this purple lines here looks very familiar, right? Because they kind of look like the lines that you would get if, let me try to see if I have a recent one. If I don't, I can just pull one up right now. And then you can compare and contrast with what I've been telling you guys. Because I'm using software that just analyzes the chart and just comes up with the sine waves, right? It just comes up with the frequencies that actually has the highest correlation. Okay, so they're using digital signal processing type stuff here, fast Fourier transforms to figure this out. All right. So let me get up here for you. All right, and then I can go here. All right. Okay, so now I'm gonna take this and move it over. All right. Okay. Now you see this one, right? So this one, I'm not using the sun, the moon, Jupiter, Venus. No, I'm just using whatever the software analyzes. It just analyzes the waves here, and then it gives me a spectrum. It says like, well, there could be a cycle at 80 something and 100 something right here. These 2 points right here, right? You see that? That's why you have this like cone shape. So that means there's like something relevant that's happening on these 2 cycles. Okay, so I can take one off. See, I can show you the 127 by itself. I can show you the 80 by itself. Okay, and then I can combine the 2 sine waves, and it gives me this into October. The top is June. Now look at this. Pretty similar, huh? And he's doing it in a different way. He's actually looking at Venus and Jupiter, and then looking at those cycles, and then shifting the sine waves around until they line up to the stock market. And then he goes like, "Here's my cycle." Huh. Interesting. Well, I have no idea if Venus or Jupiter has any effect on your psychology, but hey, whatever works. So I think that if Eric was here, he'd probably be like, "Oh my God, so we need to have some more scientific research into this." Yes, I know. Why is this like happening? What is going on? Is there some influence from the planets. I don't know why, right? I gave some ideas why. I said like there is a lunar cycle alignment with the sun. Okay, there's definitely that. The affects like the gravitational pulls, and I don't know if it affects your psychology. You are mostly made of water, so if it can raise the tides in the ocean, maybe it affects the water in your cranium. I don't know. I think people have tried to see if that's true, and it's inconclusive. There was no statistical um, significance to it that the gravitational pull. There is something to do with the moonlight, okay, with people's menstruation cycles, but outside of that, I don't know about gravity, how much that has been researched, but people are researching it. That's for sure. They still are, but I don't think we're getting good data right now. In any case, there's something to it. And we see, like, yeah, if you look at these cycles, yeah, there's something going on where this shape here from June down to October seems to match this downward move here on this guy's a magenta chart. See, so yeah, so we'll see. But I think we have about a month, maybe 2 months. Maybe if we're lucky, it's 2.5 more months, and we can get into July. And then from July, we're going down. Bye bye. Bye bye. Something will happen and we'll go down. Okay. All right. Let me see how much time I got more left here. I don't think I got too much time. I'll be back like later. If there's something that happens, maybe something will happen later tonight. Who knows? And I'll come back and be like, "Whoops, he told you there's a false flag. Blah blah blah. Here you go. Buy the dip. Buy the dip. Buy the dip." But yeah, don't worry too much here. You can be patient and wait. I just can't tell you guys to be doing something that I wouldn't personally do. Like I bought some Oracle. All right. I bought some Hut. Okay. I bought some Core Weave. Yep. And I bought some Adobe. So the past 2 weeks I've been doing that, but not big positions. I rather have confirmation. It's if I missed the dip the last 2 weeks, if that was the only dip we're gonna get, that's fine. We have a lot more price action in the coming 2 months. All right. Don't worry about it. All right. It will make Intel look like nothing once these types of stocks fly. Intel was just a little teaser. Okay, people might think like, oh man, Intel should have been in Intel. Forget Intel, forget AMD, forget that stuff. No, 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 no. We're gonna see something more crazy. Once that money gets out of there, these software names will really blow up. Okay, so Palantir after the close. I'm gonna wait and see what Palantir does after the close. We'll go tomorrow morning. Maybe we'll buy some. We'll chase it or something. I don't know, and we'll see from there. But yeah, Palantir, I'll be watching. That's it. Okay. All right. 1 hour. Good, good, good. Anything else I want to talk about quickly before I leave? This is a good chart. So during Warren Buffett's time, you see this? This is what happened during the peak. So in 1999, it was probably already 200x, 300x, and then by the 2000 toppity top, Yahoo was valued at 800 times forward price to earnings. Cisco was 200 times forward price to earnings. Microsoft was 73x price to earnings, forward price to earnings. Today, Microsoft is just at 25, Amazon at 24, Google at 17, Meta at 16. All right. There you are. So we got a lot of bubble coming. If you guys think this is a bubble, wait till next year. Wait till next year. Everybody's going to be like, oh man, 200x, 300x, 400x, 500x, that's normal. Warren Buffett is out of touch. Warren Buffett is out of touch. Yeah, we'll see. We'll see. Anyhow, yeah. So this was like what was happening over the weekend. I was watching this on Twitter. I was like waiting for that false flag. It didn't happen. So yeah, all the airplanes were moving back and forth between the UK and the Middle East. They were reshipping, shipping back in and out a bunch of equipment. So they're getting ready for something, man. So we're just waiting for Iran to like eat the bait. Like, just eat the bait. Just bite. Come on, just bite. Bite Trump's little bait here. Like go in there and blow up a civilian ship, and then we'll have another excuse to start a 60-day war. And there you go. Great. All right. I'll see you later, guys.